into that. But very simply, it's an option strategy that allows us to bet on the market. When I say the market, we're going to be referring to the SPX or the XXP. That is the index of the S&P 500. So nobody here should be trading the SPY. So if you are trading the SPY, you have been taught wrong. That is incorrect. You should not be trading this product. You're paying way too many taxes. Really, really bad instrument is SPY. You want to trade the SPX or XXP. Lots of advantages. So when we say the market, we're referring to the SPX. That's the S&P 500. Meaning, we get to play it and have a cushion, meaning it allows us to bet on the market not falling below or above a certain price. Meaning we don't care if the market goes up, down, stays flat, or, it doesn't matter. Let me show you what I mean by that. So let me pull it up here to show you. Okay. If the stock market I'll show you all exactly what I mean. Here we go. If the stock market, so today at 10 a.m., we place the trade, tells us exactly what to do. So we sell a call credit spread. Our upside was if the market, the S&P 500, went to 6,300 or above. Actually, this is our cap, 6,301 to be exact. As long as the market stays below this number, we make money. As you can see, we're almost at 100%. So therefore, when we place the trade, we don't have to have the market go lower. In this case, it did. Great. We made our money earlier. But as long as the market stays below this line right here, I'll show you exactly what I mean here. 6,300, we make money. So therefore, if the stock market rallied 35 points from here, that's okay. If the market went to 6,000, that's okay. If the market went sideways, even if the stock market in the last hour 20 went all the way up here, we still make 100% of our money. So we have what I call a big wiggle room, a cushion. Unlike if we were to sell a stock, what do you need the stock to do? You need it to go down immediately. Or if you buy a stock, what do you need it to do? You need it to go up immediately. Because if it goes down, what happens? You lose money. With this, it just has to stay within the range, and that happens every single day. So like yesterday, we had an up arrow, sell a bull put credit spread. Just so happens the market went right in our favor. But even if the market went sideways, even down a little bit, we still make our max profit. So that's a lot of cushion, wiggle room. It's like sitting in a Cadillac. The seats are comfy. Okay? So that's why we do a credit spread, because we don't have to worry. Now, there are different types of credit spreads. When we have a down arrow, we'll do a call credit spread or a bear call credit spread. When we get an up arrow, we'll sell a bull put credit spread. Let me show you what that looks like here in the option chain. So for today's trade, since we had a down arrow, let me show you all how we execute that. So we're going to go to the option chain, and you could do this on Robinhood. You could do this on Thinkorswim. You could do this on any broker platform that you like. We'll just go to the option chain. We'll type in SPX. You can see our P&L, our profit, and the trade. So when we did this trade this morning, all we do is we click on the option chain that expires today, so July 15th. Where it says spread, it will usually default to single. All we have to do is change it to vertical. And then we find the strike price of how much money we want to make. So this morning, the 6,305 was about $1. So that equals $100 per contract. I did 3 contracts, so that equals $300. So let's say I want to do the trade for tomorrow at 10 a.m. I'll find my down arrow, which the indicator will tell me exactly and show me the lines in real time. And all I do is try to find which strike price is $1. So it just so happens it's almost the same as today. Right about here. 6,295, 6,300. You can see it's 90 cents by $1.10. So to place the trade, I'll just click on it and I'll try to get $1. Now, obviously, we're going to wait till tomorrow to do a trade once we get the correct signal via the indicator. But you can see I'll get $100 per contract as long as we stay below 6,300. So that's about what? 35 points. That's a big cushion. The market is dead flat on the day, 3 points. So pretty easy defined risk trade. And I can do that every single day. No questions asked. Pretty simple, right? Now, in my opinion, this is the best way to use credit spreads with the 0-day options because everything is on your side. You're trading exactly like a market maker. We should trade like market makers because they win a majority of the time. So why trade the options that expire at 4 p.m.? They're shorter duration, meaning faster time decay. So again, about an hour into the day, we were up around 50%. Why is that? Because of time decay. The probability that the market's going to rally 35 points between now and 4 p.m. is very low, extremely low. So that works in our favor. Faster time decay. Great. Premium burns quickly in our favor. Great. So you can see we're already at max profit. And it allows us, my favorite, for the same day payouts. Meaning we don't have to wait days or weeks or anything like that for us to get paid. It's kind of instant. Why does this work? Most days, the stock market stays within the implied range. So look at the stock market today. We are dead flat. The S&P 500 is dead flat. 0.04%. Dead flat. This morning it was up how much? About 0.5%. So most days the market stays within the implied move. We're not having to guess on the direction. That's a huge plus for us. We don't have to guess. All right, the market's going to go in this direction today. So let me show you what the market maker move looks like so you can see the visual on your chart. So let's pull that up. So here, the market maker move is only 2 points. Is that pretty wild or what? Why? Because the stock market over the past since 10 o'clock, or pardon me, since about 11 has been dead flat, right? We haven't moved much. Now, if we look at an individual stock, let's say Netflix, the implied move is $80. Why does Netflix have an $80 implied move? Or $79 to be exact. Why would Netflix have a $79.50 move? It has earnings this week, right? So we don't want to use that, right? We want to do the S&P 500 or the SPX, which is a cash index. So you can see the market maker move becomes less and less and less throughout the day. So this morning it was about 20 points, and now you can see it's only now 7 points. So pretty small. I guess there's some news coming out. So you see how the market maker move is in our favor. Let's look at an individual stock so you can get an idea of what I mean. Let's look at a stock like the QQQ, which is the NASDAQ index, right? The move in the NASDAQ is only 65 cents. It's pretty light between now and the end of the day. But why is that? Because the NASDAQ has not moved pretty much at all from where it opened this morning. Here's the open, and here's the current price. So you realize the stock market doesn't move. If you're doing debit spreads, like Dave says, you have to be right on direction and you have to close it out. So you're paying more commissions. Time is not on your side and you have to be right. With this, time is on our side. We don't have to close it out. So it won't count as a day trade. And we don't have to be right on direction. Most days, when you buy options, 97% of options expire worthless. Most days, just like we showed in the Qs, the stock market is range bound. It has been proven in time again. Let me show you what I mean. Look at the chart here. Stocks barely move during the day. Who makes money in the stock market? The market makers. When is the stock market open? 9:30 to 4 p.m. So therefore, the biggest advantage is to not do a directional bet on the stock market. It's doing a neutral strategy on the stock market because most of the moves in the stock market happen overnight when we're sleeping and retail investors don't have access. Intraday, the stock market barely moves. It's the whole reason we've been winning this year with over a 90% win rate on over 100 plus trades. Now that you know what I'm talking about, let's go over how to enter a credit spread properly, and we can pull it up on Thinkorswim. So therefore, let's pull up a ticker, and let's say we want to do Netflix. We'll use Netflix because it's a crazy one. The market makers are expecting Netflix. And again, we're not going to place a trade on Netflix because I would not place a trade on it if you gave me $1 million. Well, I would. But just to show you what the market maker move looks like. So this week, the market maker move, and it will tell you right here, is about $80. Okay? So therefore, $80 higher or lower. If I want to trade Netflix, I would take the current stock price plus 80, and I would get me an upside target. So that would be about 1330. So therefore, I want to trade Netflix, I would go all the way to the 1330 calls. And I got to go super far. 1330 calls. And they're about $16. Wow, they're expensive. Why are they so much? Because the market makers are expecting Netflix to stay within 1630 all the way down to about 1170. And let me show you exactly what I mean. So every day it's going to be displayed on my range. So I could sell a bear call spread, or I could sell a bull put credit spread. Or if I want to get directional, I know exactly if Netflix has good earnings, it's going to go there. Bad earnings, it's going to go right there. Pretty simple. I can do that every single day. The easiest part is to do it like how we do it. And that's by using the 4 p.m. payout plan to where every day the market makers are giving us a range. So today, with only an hour left, the market makers are expecting the S&P to go down to 62.55. That will be support. Or it could go all the way up to 62.65. That's resistance. It's not much, right? So at 4 p.m., let's check in and see where we close in the S&P 500. All right, we're going to keep it so y'all can hold me accountable. All right, sound fair? Because we could do this trade every single day at 10 a.m. And why do we do it at 10 a.m.? Because the market maker move is usually higher and we have the whole day for the trade to work in our favor. And usually the last economic news ends at uh, the last economic news usually ends at 10 a.m. So who is this good for? And why should he be doing this? If you're busy, you don't want to stare at the screen all day. I don't. Smaller accounts needing consistency, or if you have a big account, you could just do more contracts. Anyone who values defined risk. Common mistakes to avoid. Selling spreads too close to the current stock price. I see a lot of people do that wrong. Closing positions too early. And again, we want defined risk. Oh, thank you, Kathy. Appreciate it. Shout out to Donald, and we'll give Kathy a shout out too. Donald says 5 contracts today, paid for the membership plus a little more. And then Kathy just wrote, I've been in the program since the inception. I'm so confident the strategy and his sensitivity as to when or not for the day. I am quite comfortable trading 10 to 20 contracts a day. Since I've never lost, my trading account has multiplied quickly. I was even able to do it while on vacation in Acadia. Where's that? Hold on, we gotta look up where Kathy went on vacation. Oh, it's a park in Maine. Ooh, wow. I want to go. Really? I had no idea. Probably beautiful right now too, especially with the summertime. Well, geez, now you got me FOMO. Because I didn't have to manage it. So cool. Well, thank you, Kathleen. Hope you had fun. Now I want to go. I have a buddy who gardens. He leaves the summer to go to Maine to gardening. It's too hot here. All right, overall, thoughts on credit spreads in general. I would say easy to do. Don't have to get too cute and creative, and you really don't have to manage it. So kind of best thing. Again, you don't have to really be on the computer all day, which is kind of my favorite thing. I'll open up some questions for the chat. So put your questions in the chat if you have any.